Hello everyone. We discussed in the last class up to what are the financial expenses, why we are getting the different profit or losses in both set of account. I mean in the cost accounts as well as in financial account. What's the reason? We are already yet to know. Now let us move to the format of reconciliation statement. If we are going to prepare net profit as per cost account, if they are given in the problem, we need to find net profit as per financial account. Both are same, like net profit as per cost accounts or net loss as per financial account. These are all the same. If these information given in the problem, we need to find the net profit as per financial account or net loss as per cost account we are getting. See, if they are mentioned in the problem net profit as per cost account, we need to add some item and we need to deduct from this some item. See, over absorption of overhead in cost account. Over absorption of overhead, that means we need to add to the profit as per cost account. Over absorption in the sense over valuation of overhead. The over valuation of overhead in the sense of factory overhead, administration, or else selling and distribution overhead. If in case these overhead are increased in the cost account, we need to add to the profit, and purely financial incomes are not recorded in the cost account. As I told in the last video, I mean financial income should be added to the cost account and financial expenses we need to deduct from the cost account, and item of expenses charged only in cost account. See, item of expenses only in the charged in cost account, and overvaluation of opening stock in cost account and undervaluation of closing stock in cost account. These are all the items we need to add to the profit, and some deducted items are under absorption of overhead in cost account. Under absorption in the sense of financial overhead, or it may be in the factory overhead, administration overhead, and selling and distribution overhead. You are getting the undervaluation of overhead expenses in cost account that should be deducted. And purely financial charges are not recorded in cost account, like financial charges in the sense of income tax, penalty, donation, or it may be the goodwill written off, preliminary expenses, debenture discount, bad debt reserve. These are all the items we need to deduct. And undervaluation of opening stock in cost account deduct, and overvaluation of closing stock in cost account we need to deduct. See, vice versa to the add and less opening and closing stock. If we going to add the overvaluation of opening stock, add, and undervaluation of opening stock will be deducted. After deducted from this profit, you are getting the profit of net profit as per financial account or net loss as per cost account. See the complete information, like reconciliation statement showing reconciliation of cost and financial account. As I told, now if they are mentioned in the problem profit as per cost account, we need to find the profit as per financial account. See, income, I mean over absorption of overhead, and purely financial income are to be added in the cost account. Financial incomes are interest received, dividend received, share transfer fees, profit on assets sold. These are all the financial income. And over valuation of opening overhead will be added, like factory, administration, and selling. Undervaluation of closing stock will be added, and overvaluation of opening stock should be added. And deducted items are financial expenses. Financial expenses are income tax, it may be the penalty, donation, goodwill, preliminary expenses written off, and bad debts reserve, loss of assets sold. These are all the financial expenses we need to deduct from the profit. And undervaluation of overhead expenses in cost, and overvaluation of closing stock in the cost account. These are all the items we need to deduct from the profit. Now we are getting the profit as per financial account. If they are mentioned profit as per financial accounts, added item will be deducted item will be added. You are getting the value of net profit as per cost account. If they are mentioned net profit as per financial account, now added item will be deducted item will be added when they are given specifically mentioned profit as per financial account, and that time you are getting the profit as per cost account. See, if some cases they are mentioned in the problem both profit of cost and financial account. As per the Amendment Act, we need to consider profit as per cost accounts only the base, and we need to compare all the value to the cost accounts only. I mean financial values should be always compared to the cost account. Then only you are getting over or under valuation of overhead. Now let us see the first problem. From the following particulars, prepare reconciliation statement. See, they are given the income and expenses in the problem. Net profit as per cost account. See, net profit as per cost account they are given. How much they are given? 4 lakh. Now we need to find net profit as per financial account. See, income tax provided. We are preparing cost account. So this is financial expenses deducted. And share transfer fees. This is income, so that we need to add. Overhead as per cost accounts as estimated 68,000, whereas 56,000 are charged in financial account. See, in financial account overhead are 56,000, but in case cost account 68,000 overhead. I mean difference amount will be overhead over recovery, so that we need to add. The next one, company provided 40,000 for doubtful debts. See, bad debts they are mentioned, so financial expenses we need to deduct from the profit. Director fees, as name itself says, that is financial expenses deduct. Depreciation charged in financial account, this is also financial expenses, we need to deduct from the profit. Value of closing stock in cost account 37,500. Value of closing stock in financial account 41,500. See, financial account 40 under absorption of overhead. See, under absorption of over ಅಥವಾ under valuation of closing stock will be added. See, because more in financial account less in cost accounts, so that under valuation of closing stock will be added. Interest on investment not included in account. Interest on investment will be income, financial income, so that we need to add. Goodwill written off in financial account. Goodwill written off, that is compulsory financial expenses deduct. Stores adjustment credited in financial account. See, this is income because credited in financial account, so this is added. See, now we are going to prepare the reconciliation statement. Net profit as per cost account. Now we need to find net profit as per financial account. How much they are given? 4 lakh. So for that, financial income will be added, and closing stock and opening stock will be added. Transfer fee, as I told, to be income. Overhead over recovery, because 68,000 more than the financial account value, so that difference amount will be 68 minus 56, you are getting 12,000. And under valuation of closing stock 4,000, and because financial accounts value will be more in closing stock. Interest on investment, income, financial income, stores adjustment credited in financial account, so that we need to add. Total you are getting 34,000, and financial expense will be deducted. Financial expenses in problem given: income tax provided in financial account 1,20,000, doubtful debts 40,000, director fees 16,000, the depreciation 14,000, goodwill written off 18,000. These are all the financial expenses we need to deduct from the cost account. The total will be 20,800, and you are getting the value net profit as per financial account 2,26,000. If they are mentioned cost account, we need to find the financial account. Thank you.